Good morning, everybody. It's Tuesday, January 7th, 5:25 a.m. Central Time. Grain markets are mixed this morning. March corn futures down 2.5 at 455 and a quarter. March soybeans down 8 at 989 and three quarters. March Chicago wheat down 1 3/4 at 538 and three quarters. March Kansas City wheat up 1.5 at 554 and three quarters. March spring wheat up 1.5 at 593 and three quarters. There are some analysts out there who are bearish the soybean market. Let's start off with that.
So, analysts at Rabobank believe that soybeans could fall below $9 per bushel if another U.S. China trade war erupts. The analysts believe that China would retaliate immediately with its own tariffs on U.S. grains and oilseeds if Trump proceeds with his aggressive tariff plan. Rabobank believes that a trade war would allow Brazil to gain an even stronger foothold in the Chinese market. Spot month CME soybean futures trade near 980 here this morning.
Analysts are going to analyze, and in this instance, they're bearish. My favorite analysts are the ones who try to predict what the stock market's going to do every year. They're like always wrong. I mean, there's a couple outliers that might be right, but they're always wrong. So just because an analyst with a big bank says something doesn't mean it's reality. Do we have to repeat what happened last time? So during the trade war in 2018, 2019, into the first part of 2020, soybean futures traded on and off below $9 per bushel, and I think we traded down to $8 per bushel, or very close to it at one point in time. So, do we have to repeat that? I don't know. You could certainly make a bearish argument for a sub $9 board, even without the trade war. I mean, just given the prospects of this big Brazilian crop, given the prospects of record world soybean ending stocks, all of those things that we've talked about for months, it feels like. I mean, you could make the bearish argument that, yeah, we should be below $9 per bushel. What are the funds seeing that we're not seeing? So large money managers are like barely short the soybean market. They're not holding a big short at all. So I guess one of my questions is, and I've asked this to a number of our guests in the premium videos, why aren't we there already? Everybody knows that Trump's going to come into office and probably enact some sort of tariff type thing. Everybody knows about the bearish supply and demand projections. Why aren't we there already? One of the questions that I have, certainly. So I don't know. I think it's just a maybe. It's one version of analysis. Doesn't have to be correct. On a side note, my current bet with Pete Meyer is this, and we made this bet when beans were trading about 980, which is around where we're at this morning. I bet Pete that spot soybean futures would trade 1080 before they traded 880, and Pete took the 880. So we'll see. I'm not all what you guys think. I'm like a perma bear. I'm not. The markets just have sucked for the last 2 years. But no, I'm not as negative as Rabobank. I don't think. I don't know.
President-elect Donald Trump denied claims that he is considering a softer approach on tariffs. On Monday, Trump dismissed a Washington Post article that alleged his tariff plan would only target critical sectors that are vital to national or economic security. The claim would have been a significant shift from the tariff promises Trump made in recent months. During his presidential campaign, Trump vowed to impose a 10% tariff on all imports and a 60% tariff on Chinese imports. He also said he would slap a 25% tariff on Canadian and Mexican imports. The U.S. and European stock markets surged following the newspaper article and held on to gains even after Trump's denial.
We did Macro Friday with Jim this past Friday, and we talked about some of Trump's tariff talk. And Jim's belief, and I tend to agree, is that when Trump talks really tough about tariffs, the talk is not meant for us. The talk is meant for leadership in China and Europe and elsewhere. He wants to initiate these threats so that he can negotiate. That's Jim's belief. And I tend to agree with that. There is an end game to this. He doesn't want to do tariffs just to do tariffs. I mean, he wants to do tariffs to enable more free and fair trade. So I don't know. I don't know what he's actually thinking. We know that he's going to he's going to talk tough. He's going to talk tough, certainly, until he gets his way or until we get into a trade war. I don't know. But I think the purpose here is to try to scare China and scare others into coming to the table.
The funds have substantially increased their net long position in the corn market. CFTC released weekly commitment of traders data on Monday. As of Tuesday, December 31st, large money managers were net buyers of 58,000 corn contracts. The net long of 224,000 contracts is the largest since February 2023. Funds were also net buyers of 29,000 contracts of soybeans and 12,000 contracts of SRW wheat on the week.
One of these things is not like the others. So the funds hold what I would call a fairly aggressive net long position in the corn market, whereas they've got a small net short in soybeans and a modest net short in SRW wheat. As we talked about last week, and I'm going to talk about it again because it's important. If we're in a bear market cycle, if this is just one of the peaks within a multi-year bear market cycle, you could make the argument that this is about as heavy long as the funds may get, because during your last bear market cycle, which was 2014 through the first part of 2020, this is around where the fund length in the corn market peaked, around 220, 230, maybe up to 270,000 contracts. And if you look at this chart that's on my screen, if you guys are watching on YouTube, you can see that. Look at 2014 through 2019. The peak in fund length occurred around these sort of levels. When you match this up at price with price, and you put price and overlay the managed net on the same chart, you can see that the peak in fund length and peak in corn prices very often coincide. And is that because the funds are the only ones responsible for moving the market? No, it's because the funds are trend followers. They follow the trend. So when there's big turns in the markets, when there's big trends, they ride those trends, they ride those turns. So if, and this is a big if we're still in a bear market cycle and we're just in one of the peaks in a bear market cycle, but we eventually revert back lower, this may be as heavy as the funds get to the long side. And that could mean that prices are near some sort of peak. If that's where we're at, are we in the middle of a bear market cycle still and we got 2 years to go? I don't know. Maybe we're on our way out. I don't know. I think it's something to consider, though.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Paul Nefer was on yesterday. We cleaned up some stuff with ERP. So ERP, the emergency relief program, and the payments that are going to go out, it's not finalized, and there is not any degree of certainty here. But there's a couple different possibilities on how this thing may pay. And Paul discussed what we know as of right now. He made an updated calculator available and kind of threw the two different scenarios in. We also took mailbag questions regarding the direct payments, ERP, things all related to that. There were about 20 questions. I'm sure that he answered some of your questions that you have. If you guys want to see that updated calculator in that video, check out the premium deal. It's going to be included in this morning's email. And if you sign up this morning, I'll forward you a copy of that email. Go to standardgrain.com, sign up this morning, $50 per month, cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. In today's video, I'm going to talk about new crop corn marketing and what I've advised, what I'm planning to advise, what my game plan is. Check that deal out today, guys.
Extended weather forecasts offer some relief for portions of southern Brazil and northern Argentina. The Euro and GFS models are in agreement that these areas will be mostly void of rainfall through the 10-day period. Extended runs of both models, however, indicate that rains will return during the 10 to 16-day period. A chance at more normal rainfall exists during the 15 to 28-day period based on the Euro ensemble forecasts. Soybean meal futures closed lower on Monday and traded lower early this morning, perhaps on ideas of improved rain chances.
Okay, so if you guys are watching, the map on the left here is the next 10 days, and you've got this pocket that's going to be totally void of rainfall. And then you have some rain that returns during that 10 to 16-day window, which is pictured on the right. Here's a map from our friends at Crop Profit. This is the extended Euro, the 15 to 28 day. And you're still a little bit below normal with regard to Argentina, but much closer to normal. So I think there are some ideas here that, okay, we're going to be dry for 10 to 12 days, but then maybe you've got some rains that return. I'll be the first to admit that extended forecasts are unreliable and not trustworthy. Brazil looks good also during the 15 to 28 day period, expecting above normal rainfall, even in the southern areas that are going to be dry the next 10 to 12 days. So maybe a little bit of light at the end of the tunnel here with regard to South America in these drier areas. The meal market has sold off each of the last 2 days, and today would be a third day in a row. There was a big short covering event. The funds were record short the meal market, and they covered about a third of that net short position in just 1 week. And now the market's falling off again. So I don't know if that was it for the meal rally. If that was it for the meal rally, the soybean market itself may also have a tough time.
U.S. corn shipments were in line with pre-report expectations last week. USDA reported that 33 million bushels of corn were inspected for export during the week ending January 2nd. The print was down 6.6% compared to the previous week and down 22% versus the same week last year. Soybean shipments were reported at 47 million bushels. The print was down 22% from the prior week, but up 23% compared to the same week last year. Wheat shipments exceeded expectations at 15 million bushels. The print was up 22% from the previous week, but down 18% versus the same week last year.
Soybean shipments have been declining seasonally the last few weeks. This is perfectly normal to see that sort of decline. Sometimes you'll see a spike in January, February. Sometimes you won't, but it's normal for soybean shipments to fall off. You'll start to see corn shipments accelerate in all likelihood February, March. That's typically the way that it works. With regard to USDA and their projections for the export programs, I don't really have much of a disagreement. They came up with the corn number. They've been kind of steady with the soybean number. Soybean sales have been better. Shipments have been strong enough. I feel like they're probably fair with their estimates.
The U.S. has confirmed its first human fatality resulting from bird flu. The individual, who had underlying medical conditions and was over the age of 65, was hospitalized in Louisiana back in December. Health officials have confirmed 61 human bird flu cases nationwide. However, the number of cases is likely underestimated due to some infections being asymptomatic. Farm workers in California and Washington who have had contact with infected poultry or dairy cows account for the majority of cases. Scientists have found no evidence that bird flu can be spread from human to human, and the majority of cases have been mild, with the main symptom being pink eye.
So with regard to, say, the livestock markets or the poultry markets or the grain market, I mean, is there any implication here now, or is this just it's old news?
Not regard to the cattle markets. Obviously, I believe it's having an impact on, when it comes to poultry, it's having an impact on egg prices.
Mm-hmm.
But this is an old story, and I feel like it's blown out of proportion more often than not.
So to have one death, that's kind of, it was an older person. It was kind of a fluke more. It was
exactly
an exception.
Let's look at the fine details. I mean, that person had other issues. We've had a fair amount of other cases, and it's just pink eye. People get over it.
Yeah. What did cattle prices do yesterday?
So cattle futures had another impressive day yesterday. Live cattle were $1.15 to $1.75 higher. Feeders saw gains ranging from $1.37 all the way up to $2.20. Box beef was higher again. Choice ended the day at $327.10. That was up $1.86. Select ended the day at $303.33. That was up $6.61.
Outside markets are pretty quiet this morning. U.S. dollars off a little bit. Stocks are just fractionally higher. Bonds off a little bit. Crude oil is up 40 cents in the March WTI at 73.32. The crude market has been stronger as of late. Have a great day, guys. We'll be back on Wednesday.